Welcome to our second episode of the Validus View. This is a special episode as Validus turned 15 years old this year. So what I'd like to do is take a look back at the journey of Validus over the last 15 years from a very small startup in Windsor with a big idea to kind of focus on risk management and hedging for the private capital sector to where we are today. But I also like to reflect on kind of the macro events and the changes in the private capital industry which have helped shape this journey. So I'm joined today by two friends and two colleagues, Marc Cogliatti, who heads our market risk strategies business here in the UK, and Haakon Blakstad, who's our chief commercial officer based in beautiful Oslo, which you can see just outside his window from behind him. So maybe if we just jump right in, I'll start with Marc. Marc, you've been on this journey with me literally since day one. You know, I'd like to kind of get a sense of your early memories from 15 years ago.
Yeah, thanks, Kevin. So obviously we've come a long way over the course of the last 15 years. If I think back to day one, it was just a huge sense of enthusiasm and excitement, about what potentially lay ahead of us. If I think about the team that we had in the very beginning, there was a real sense of team spirit. Everybody was all in it together. We had very little in the way of sort of seed funding, and everybody was just there because they wanted to be. And that, made for very, very exciting times in the beginning.
Yeah, no, it was very different back then. I think there was, I think we started with a handful of people. I think our low point was about 4 people. And now we're well over 100. So it's certainly been a long journey. Maybe turning over to Haakon. So you joined us, I think, over 10 years ago now, right? So I think we were just emerging from the real startup phase, but we were still quite a small business with more of an idea than an actual business. So I'm just be curious to get your thoughts on, at that point, what you saw in us that made you, I guess, compelled to join the journey with us.
Yeah, thanks, Kevin. So I think I joined at that low point you talked about because there were about 4 people at the business. And as you recall, I'd already taken an entrepreneurial step myself, having left banking to set up my own business a couple of years prior, but found it hard to see the proper growth trajectory without a partner. I was doing this on my own. So I think what I saw in you in the business, but more importantly, you as individuals, was that partnership or that opportunity to partner with someone who had very different but complementary skill sets. At the same time, we had a lot in common, shared a lot of views on many of the important aspects of building a world-class business. So that was probably the most important reason, but as I said, I'd kind of already decided to take that step into the entrepreneurial life. But on top of that, I think, so even though the business proposition at the time was less developed, as you said, it was more of an idea, and I'm not going to claim that I knew then what the business would look like 10, 15 years later. But I've always been interested in risk as the, I guess, inevitable flip side to reward. So I felt that was a space where we could have a lot of success if we did things well. So ironically, I decided to take a risk on risk.
And how's that worked out for you?
Yes, it's like they say, no reward without risk. So it has worked out really well. I think part of what we do here is help people manage risk and mitigate that. And so that's obviously part of that, taking risks that you feel that you can handle. And that was the beauty of, the team that we had, and still do actually, but it was more dynamic when we were smaller, was this kind of, no challenge was too big. And, yes, we had our high points and our low points. But, where we had challenges, we could band together and figure out solutions to them. And it's what I always said, it's the best investment I've ever made because I can actually do something about it, as opposed to passively being invested in, some public stocks or whatever. So I think it's worked out really well.
Yeah, I always think that about entrepreneurship generally. Like it's It's certainly not for everybody. And what I guess what I realized very early on, exactly to your point, was, you can have a big impact, and that can be really positive, i.e. you kind of affect your own outcomes and your own future. It can also be very stressful because you can't really blame anyone else when things kind of don't work out. Things don't go as you expected. And certainly we've had a lot of those situations as well. But yeah, it certainly keeps life interesting. Haakon, like looking back to when you joined then, say just over a decade ago, is there anything that you miss from that time? Is there anything you kind of look back on and you think, oh man, that was great? And likewise, is there anything you're really happy that we've gotten past over those 10 years?
Yeah, I mean, you mentioned, jack of all trades. And, in the early days, we had no track record. We had no big client base. We had no technology, right? We just had a handful of people, a lot of ambition, and I guess a willingness to go through, whatever amount of blood, sweat, and tears that we needed to go through, right, to make things happen. So I do miss that. I miss those days, perhaps with rose-tinted glasses, because it obviously worked out well. I'm not sure if I would have missed it if it had been a flop. But and funnily, I think that is actually the exact same thing that I'm happy that we've moved beyond, because, we got to a point, like any growing business, that in order to continue growing, we needed more structure, right? We needed to grow up as a company. And I actually think we managed that really well, both individually, because that is, a change in mindset and you have to sometimes let stuff go. But we also managed it well as a team and as a company. And I think it was particularly fortuitous that happened in good time before the global COVID pandemic arrived, because I think it would have been very difficult to manage that without some proper structure in the business.
Yeah, I know. I find it interesting as well from a pressure standpoint. Or at the beginning, in a way, there's more pressure because you've got to start from nothing and build. Your kind of livelihood depends directly on how successful you are. But on the other hand, I feel more pressure now because there's so many more, whether it's employees, whether it's clients, whether it's just the industry. People know who you are, and that brings with it a certain degree of pressure. So yeah, I guess for me, the same thing. I liked having that kind of ability just to do my own thing back in the early days without worrying too much about it. But on the other hand, I quite like having that additional pressure now because it means we've come a long way. So I think that's very rewarding.
I was just going to say, I think there's a big expectation now as well. Whereas I think now, the type of names that we're working with, the clients that we're serving, they all have very high expectations of us as a business and the service that we're going to be able to provide.
With all the changes and evolutions in the business, what products, what services, what innovations that we've come up with are you guys the most proud of being part of?
When we started out 15 years ago, we were obviously very focused on risk advisory. And that, for me is something that's gone from strength to strength, particularly over the course of the last decade. And, I think it's fair to say that we wouldn't be able to do what we do today without the aid of the technology. And having been a part of that and seeing, that grow, it's been very, very satisfying.
How about you, Haakon?
Yeah, for me, it's, obviously we've done so much, and the whole company has evolved and our products have evolved. It's a lot to be proud of. I think to single out one thing is difficult, but I've got to do that. So for me, it's really Fund Finance Ops. So it's our most recent product, just launched actually. It is phenomenal, but we've done a lot of phenomenal things. But the reason I'm most proud of that is the work that went into identifying that need and also building it. So we can trace the origin of that product all the way back to when we started to get involved in fund finance on the advisory side in 2018. And building out that expertise gave us a unique foundation on which to build a tech product that didn't exist and that now solves huge operational burdens for fund finance borrowers, which obviously most of our clients, all of our clients, in fact. And it was fantastic to see how the different internal teams collaborated to make that a reality, across client engagement to ops to tech and a number of other people. And then the strong relationships that we have and have always had with our client base also enabled us to work in partnership with some of them to ensure that the product solved all of their needs, and which makes this product, built by fund finance experts for fund finance experts, but also in partnership with them.
I think we're going to be doing an episode on that product shortly as well. So very excited to dig deeper into how we came up with that. Like I said, as you pointed out, very much in conjunction with a number of our clients, which is very exciting. And yeah, I think it's going to be a transformational product. We're a business that is very integrated into financial markets. Almost everything we do is linked to the macro environment. We did an episode last month with Cam, our chief investment officer, focusing on the US dollar and the future of the dollar. But I think it's really interesting to look at our business in the context of the macro shifts that we've seen over the last decade and a half. So Marc, as someone who's kind of led that for us and been on the front lines, what are the most memorable macro events for you that you've experienced during your time here at Validus?
For me, Brexit and the events that unfolded back in 2016. I mean, almost every European client that we have has some sterling exposure to sort of varying degrees. But I remember very clearly being hauled in front of one of our largest clients and some real key stakeholders at that client, and somebody very, very senior saying, well, okay, explain what this means, for our funds and our business as a whole. And the CFO very quickly stepped in and explained on a relatively high level that actually we had this hedging program. It was doing exactly what we said that it would do, exactly what we expected it to do. And actually, as a result, the funds were all in relatively good shape. But that vote of confidence in what we'd done as a business and how we'd helped our largest client at the time, was super satisfying from my perspective.
So I'm wondering, Haakon, from your perspective, someone who's very close to our client base, how do you feel all of these macro shifts have impacted our clients and the private capital industry generally?
Yeah, so I think, going back, a while to the global financial crisis. So I think, the rise of private capital, particularly private credit, is in many ways the market having adapted from the shock and aftermath of global financial crisis, right? Obviously, banks were in large part blamed for causing the crisis and got in hot water, had to scale back their activities, particularly on the lending side, which obviously opened up this kind of void where private credit filled and have continued to fill. But then also, you had central banks stimulating the economies with low rates and QE. So it also created this kind of, multi-year low rate environment that was also very good for private equity. And so it was this kind of perfect storm for private capital to thrive and expand. So that's kind of the backdrop. Then, of course, things have happened since, a number of other crises or developments. And so, and people adapt to that, right? So part of that is, the type of risks that we cover, particularly around FX and rates. As Marc mentioned, it is our job to ensure that these risks are managed, not just in a, day to day while the sun is shining, but, when things go wrong. And that's really important. So being able then to say to them, yep, this is why, this is how we're managing your hedging program to withstand these kind of, big moves. But I think the other thing we've seen as a result of all of these developments and evolutions, is that, private capital funds have started to pay more attention to these sort of risks. I think go back 15 years, a lot of them were focused primarily on fundraising and deal making. And we've seen a big shift, and really it's a maturity thing, but also, I guess, becoming more professional in how they manage all aspects of their business. And so a lot are more keen to manage FX risk and rate exposure, and also constantly looking to improve how they do things across the board. So, there's a lot of focus on risk management now. There's a lot of focus on achieving operational efficiencies and best practice. So yeah, these are things that kind of have happened as a result of a lot of these kind of macro events, and it's been obviously helpful to us as we've grown with that.
Yeah, I think it's undeniable that our business has grown very much kind of in tandem with the private capital industry. I think if you go back to 2010 when we started, since then, private capital has basically tripled in size. Private credit has increased tenfold. So it's been an incredible journey that the industry's been on, and we've been certainly part of that. And that was part of the idea back at the very beginning. I think we sensed this opportunity. So I'm just curious, Marc, you and I started in a slightly different world. We started in a very kind of traditional corporate risk management, corporate hedging industry. We had this idea to take some of our knowledge and expertise and apply that to an industry that we thought could use it. And that ultimately paid off. But I'm curious from your perspective, how has it been different? How is that kind of focus on this industry been different from kind of traditional hedging, traditional risk management, as we both knew it 15, 20 years ago?
I mean, if I think back, and actually, we do still work with, a number of corporates, but obviously our big focus these days is on the private capital industry. I think, my early recollection from working with corporates was that the big focus was very much on cash flow. We did very little in the way of balance sheet hedging, with our clients at the time. And if we fast forward to where we find ourselves now, that focus on the balance sheet is sort of far more prevalent. There's still some cash flow hedging done for sure, but it's very much focused on the assets and the life of the hold, of those assets.
Yeah, no, I always, looking back, I remember, starting this business. It really was a result of being asked so many times by, at that point, it was mainly private equity firms, looking to improve the way they manage risk and just not being able to apply like for like the same tools and techniques as we traditionally done in the corporate world. And I think that was a big part of our journey is figuring out how to adapt that. And I think we've been pretty successful. I think, as a business, we clearly sit at the nexus of two major trends, one being the macro trend of increasing instability, increasing uncertainty, and then a second trend of this kind of growth in the importance and size of the private capital industry generally. So maybe Haakon, one for you would be like, what do you think we'll need to do differently? Like looking forward, maybe not 15 years, maybe 5 years, 10 years. What do you think as a business we're going to need to do differently than we do today to kind of meet the needs of our clients in an increasingly complicated and risky world?
We have to keep adapting to the changing landscape, as we also help our clients do the same. Recent example, for example, is how a lot of private capital managers have started to target private wealth and retail for fundraising, right? Partially in response to, this kind of view that institutional investors may not be able to allocate the same amount going forward. And so that requires different structures and terms, right, for the funds, which again impacts how, for example, FX exposure is managed. So we, when that sort of happened, we quickly adapted to that, working with our clients to develop best-in-class solutions and processes to address the specific structure. If we'd not done that, and just taken a one-size-fits-all approach, like, this is how we do things, and we would have quickly been left behind.
No, it makes sense. I think it reflects one of the big advantages we have, which is that kind of deep domain expertise within the private capital world. I remember reading something recently by Peter Thiel where he was saying like, one of the keys to success as a business, as an entrepreneur, is that specialization. You want to at least start, in an area where you can really understand the needs of your clients. I think we've been really good at that focus and not being too generalist. But yeah, I think technology is definitely going to be even more important going forward in terms of our ability to meet the needs of our clients. It's incredible sometimes when I think back, 15 years where we didn't have anyone who really knew much about software engineering and technology. We always had a vision that it would be a really important part of our business, but we didn't have those skills back then. And now our the biggest team we have at Validus, almost a third of the company is software engineers, developers, quants. It just shows you how important that is. So yeah, very, very exciting. Maybe to end off then, looking forward as opposed to backwards, what excites you most about the future for Validus?
What we are now able to do technology-wise versus even where we were 5 years ago, a kind of poles apart. And it feels like we are building something that there is a real need for, amongst our client base.
Great. And how about you, Haakon? What kind of excites you about the next 5, 10, 15 years of Validus?
So a lot of things excite me. I think boiling it down to the most exciting thing is, every time we start working with a new client, we meet someone new, we learn something new, and we get the satisfaction of being able to help someone improve their business. And that will never cease to excite me. So if we just keep doing that, I'll be happy.
The geographic opportunities, I think, are really exciting. We, as you know, we just opened our newest office in Singapore earlier this year. So really excited to kind of expand what we do in Europe and North America into Asia. And then beyond that, I think the Middle East is a super exciting place for us to look at in the future. South America, we're starting to do more work there now. So the travel can be a bit much, but I'm really excited about those opportunities. And as you alluded to, I think, the world of technology generally is changing so rapidly. And, obviously we don't know all of the implications of that and how, AI, et cetera, is going to impact the broader technology landscape, the private capital landscape, and us directly. But I'm sure there's going to be probably some challenges, but also some great opportunities there. So yeah, super excited to see what lies ahead of us. But with that, I think we should probably wrap it up here. So I want to thank you guys both for participating in this second episode of the Validus View. It's been a privilege working with both of you for the last 10, 15 years in building Validus. And again, thank you very much. And thank you for listening.